All right, this is David Frost, and I'm here to provide an update on a short trade alert for Celgene. So I want to go over this chart. There's a couple of lines and some stuff drawn in that will make sense after we discuss it. So here we go. October 21, Celgene up here makes a high. It starts downward and somewhat of a stair-step fashion, and then it makes a low earlier this month in November at 142. What happens next is Celgene starts in an upward sideways consolidation pattern, really is what it was, also known as a bearish rising wedge or a bear flag pattern. So here we go from here all the way up. This is about 8 trading days. And here's the interesting thing. Right now, we're coming into the 20 period or 20-day moving average. This is a daily chart. So we're coming into the 20-day moving average. We have a bearish rising wedge or bear flag pattern. And basically, it just screams of a short trade setup. Forget the market. I understand the market's in melt-up mode. One bad day in the market and Celgene can sell off $7-10 in a flash. Here's what would likely happen. So the bearish rising wedge breaks and it starts downward. Your target is down here at about 132. There's a lot of support at this pivot here. This started a breakout. If you go below 132, you probably come to this area here, which would also be filling the gap between here and this next update here. So this is about, let's call it 125. So anywhere in the 125, 132 area is a good target to take the trade off. I would take it off as soon as I hit 132. That's just the way I play the risk. So on the downside, or upside in this case, where do you know you're wrong? So in this trade, you can take a couple of approaches. If you take out the old high, which would be your widest area you're allowing for a loss at 162, okay, if you take out this high and close above for a couple of days above this high, trades off, patterns broken, and you're going to have to lick your wounds and move on. But I don't know that I even wait that long, because with the 20-day moving average right above you, if you were to close up here for a couple of days above the 20-day moving average, it changes the complexity of the trade, and it also changes one of the main reasons I took the trade. So I would say on a couple of closes above the 20-period moving average, I'm probably out of Dodge, take my lumps and move on. But here's a high probability trade that, my opinion, is just nothing more than my humble opinion. Celgene moves downward, probably all the way to the 132 area before finding some support down in this area, and then we'll see what happens. We'll see what the charts tell us from there. Maybe it makes another pattern you could take advantage of. Maybe it just spikes back up. I don't know. But at 132, I'm out of the trade. And there's your Celgene short trade alert for the day. This is David Frost, mystrategicforecast.com.